Welcome back to Alpha Recap. I'm Riley. Today we're breaking down the market action after the close on May 1st. Quick reminder, if you have questions as we go, you can reach us at stockalpha.ai and ask directly. Let's get into it.
Thanks, Riley. Good to be here. The trading day finished with a familiar pattern. Tech led the way, while pockets of cyclicals showed strength. That made for a bit of a mixed but constructive session.
Right. Start with the headlines. The S&P 500 exchange-traded fund closed up about 0.3%. The Nasdaq 100 exchange-traded fund finished up roughly 1%, and the Russell 2000 exchange-traded fund was up around 0.5%. So tech really outperformed.
Exactly. That gap tells you a lot about the market's character right now. Leadership concentrated in a handful of large-cap tech names, while select cyclicals like energy and materials were doing their part too.
So, what really stands out here is why the Nasdaq 100 moved almost a full percent. James, give us the color.
The big driver was earnings and company-specific catalysts. One name really stole the show and lifted a bunch of software and cloud peers. Investors are still placing a high premium on the narrative around AI and enterprise software monetization. When that conviction reaccelerates, the Nasdaq tends to benefit disproportionately.
And there was also help from energy, right? Strong upstream results in firmer oil pushed some cyclicals higher.
Right. And the other thing is, when energy reports solid results, it trickles into materials and industrials tied to resource extraction. So today wasn't tech only, it was tech-led with selective, broader participation.
Let's talk notable movers. You said one company really drove the Nasdaq 100. Tell us about that.
Yeah, Atlassian jumped about 29% after reporting results and giving guidance that beat expectations. The market liked the revenue cadence and management's take on enterprise spending for collaboration tools. That single company move was the headline that buoyed a lot of software names.
Hold on, say that again. Nearly 30%?
Nearly 30%. Big move. And when a large cap software name does that, it can move the index bigger than the average stock would.
So Atlassian was the fireworks. What else stood out in sector land?
Energy names, notably ExxonMobil and Chevron, reported solid quarterlies. Both emphasized upstream strength and margin resilience, and a slightly firmer oil backdrop helped their stocks. Materials and mining also saw interest. Critical minerals for electric vehicles and clean energy manufacturing remain a structural theme.
SanDisk-related news popped up too, right?
Yes, there were reports of a major transformation at SanDisk, whether that becomes a restructuring, strategic sale, or pivot. That chatter lifted storage and memory supply chain names during the session.
What about the more defensive corners? Utilities and real estate.
Utilities showed momentum as a defensive, cash flow-oriented alternative, and parts of real estate were supported by some large lease announcements and groundbreakings. So there were pockets of demand persisting for quality assets.
Banks and financials. How did they fare?
Mixed. Bank earnings and reserve commentary produced varied reactions. Some larger diversified financials saw positive flows, but the complex overall was balanced rather than uniformly strong.
Consumer and retail were all over the place.
You could call it cautious optimism. Some retail names showed improving trends, but consumer discretionary had pockets of weakness. It wasn't a broad breakout, more like selective wins.
Crypto also had a moment today.
Yes, cryptocurrency trading volumes spiked, and Bitcoin had a noticeable uptick. That lifted mining and exchange-related equities and some crypto-focused funds. Whether that action proves durable will be watched closely tomorrow.
Short reactions. Yeah, that tracks.
Honestly, I was a bit surprised by how big the Atlassian move was.
Big moves make for exciting tapes.
Let's pivot to the macro picture. Inflation and labor remain the key backdrop for the Fed and markets.
Give our listeners the simple version. What did the economic signals imply today?
In plain terms, headline inflation has been easing, but the labor market still shows resilience. That combination leaves Fed policy expectations in flux. Cooler inflation increases the plausibility of rate cuts later in the year, but strong employment or services data would argue for patience.
So the market is basically waiting for each data print and Fed comment to move the odds.
Exactly. Analysts note that a single hotter than expected inflation or payroll print could push back rate cut expectations quickly, while additional signs of disinflation would steepen the odds of easing and likely support risk assets.
Let's talk about market internals and technicals. The averages closed up, but breadth was mixed.
Yes, internals were uneven. The Nasdaq 100 outperformance masked narrower breadth in the S&P 500, where gains were concentrated in a handful of mega-cap tech and energy names. Small caps did post a respectable gain, around 0.5%, but the gap between large cap leadership and broader participation is something to watch.
Meaning narrow rallies can be fragile?
Precisely. Narrow rallies tend to be more vulnerable to corrections if sentiment shifts. From a technical standpoint, the S&P 500 ETF's modest gain looked more like consolidation near recent highs rather than a decisive breakout. The Nasdaq 100's near 1% move suggested momentum was intact in tech, but traders will be watching volume on up days versus down days.
What should traders and investors be watching next?
First, the earnings calendar. More tech and energy reports will either confirm or undo today's moves. Second, macro prints and Fed speak remain front and center. Third, oil inventories and OPEC commentary could quickly change the tone in energy. Fourth, crypto flows and regulatory headlines will determine if today's volume spike is durable. Lastly, watch sector flows into materials, utilities, and energy relative to tech. If that rotation persists, breadth should improve.
Any particular market risks to call out?
Two main risks. One, a hotter than expected inflation or employment print that pushes back rate cut expectations. Two, profit taking in headline winners. When leadership is narrow, profit taking can expose that narrowness and lead to sharper pullbacks.
And the upside?
If earnings continue to surprise on the upside, particularly in large cap tech and energy, we could see momentum extend and broader sentiment improve. That would likely show up as stronger breadth and healthier small cap performance beyond isolated days.
Quick reactions under 10 words.
Tech led, but energy helped too.
Breadth still the watchword.
Yep. Keep an eye on the data.
Before we wrap, any closing thoughts or tactical lenses listeners should use when reviewing today's tape?
Think in terms of concentration versus participation. Today was concentrated leadership driven by earnings and cyclical tailwinds. That suggests a cautious optimism in the short term. Momentum supports risk-on positioning, but mixed breadth and uncertain macro readings counsel vigilance. Analysts note the importance of context. Single company outcomes still move entire indexes, so watch earnings follow through.
Great summary. Quick recap of the key takeaways?
Sure. 1. The Nasdaq 100 outperformed, led by a large software earnings beat. 2. Energy and materials showed selective strength on good upstream results and commodity momentum. 3. Market breadth remained narrow, so future macro or earnings surprises could swing sentiment quickly.
Perfect. Remember, this is informational only. We're not providing specific investment recommendations or personalized advice. Analysts note market conditions can change quickly.
Exactly. Use this as market color and talk to your own advisors for decisions tailored to your situation.
All right, that's our alpha recap for May 1st. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. See you next market close.